Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar bulls continue to defend the level around 65.55 after at least 4 challenges towards the low has stepped in around that 80.85 level. With the upside remaining limited, I do expect to see any advances towards 66.20 or above to fail and should give traders opportunity to short the market, as we can see this downtrend that holds should pose a further threat, and with the ADX trending and also the MACD and the RSI married to the negative case for further challenges towards either 65.80 or 65.55. From the break of 66.60 has sealed the fate for the Australian dollar to eventually reach a target of 64 cents and reassess from there. The dollar index, which measures the greenback strength against a basket of 6 major currencies, has continued to sell off and now posts a fresh intraday low of 98.78, and with still scope to see further falls towards 98 figure 30. This on the flip side should give further momentum for the euro, since it rebounded off 107.55 along with the bullish divergence, and the cutting of the access here as zero for the MACD may see a step up towards 108.90 or maybe towards the supply zone, where I see opportunity to shorten the market around 109.35 to 50. As I do feel that we will see a rejection from here and look back towards that support level of 107.55. The dollar yen extends its decline further overnight and reaches its objective of 110.15 and now poses a threat of hitting the lows of 109.55 after inking in a short-term low of 109.80, I believe, last night, as you can see from this spike. The bears are still in control here, and I still feel that from that false move and a bull trap was laid, is that we could see one more squeeze to the downside. All eyes on that 109.55 level and see where we go from there. Sterling manages to impulse through that slight triangle shaped pattern and fails at this stage to break the level of 130.25. Until we get a break there, I feel the market will look back towards the downside, and if we see a rejection, look towards 128.45. It would seem that the dollar CAD is still attempting to recover further, as you can see, while oil weakens. At present though, I still feel the opportunity to shorten the market around 133 with 15.45, as you can see where I've highlighted in yellow, as a supply zone. And I do expect to see further risk of coming back to the bearish case and look down towards 132.50 and then lower towards the region of 131 and maybe even towards 130.70.90. Since the shooting star, the market has taken the challenge upon the downside and briefly looked under 130, that is, sorry, 1,630, that is, but didn't fail to continue on. Now, let's see if the market can remain above the 1,630, and if so, then I do expect to see a retracement to the upside, and it would need to break 1,657 to reinstate the bulls towards 64 and above to 1,680. But this signal is very, very strong in terms of a bearish case, and let's see if the market can or reject that 1,630 level. Finishing up with the oil, well, we took out the $51 after very much pressure in this level for 24 hours, but it's still a little bit hesitant towards the base, around $49 a barrel. As long as we maintain above there, then I expect a retracement towards $52 or maybe back to the highs of $54.5. But a break under $49, well, that reinstates the downside weekly objective, which is seen somewhere at $45 to $46 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this day.